This week, markets made big moves. After months of sideways consolidation, both the DAX and CAC40 broke out of their ranges, confirming the bullish scenarios we've actually been outlining for quite a while. And the SP 500 is pushing upward as well, and we're going to see that. My screeners have therefore been full all week long, returning many new opportunities. And in parallel, the first trade of the year, which I shared live last week, is already a winner. Partial profits are secured and the position is now managed within the trend. So in this video, I cover the DAX and CAC40 breakouts and why they matter, how I frame these scenarios well before the move, and I'll take you again through the analysis, the trade progress review, that trade I just mentioned, and what to expect next, and of course, our usual market analysis. Otherwise, there's no victory laps, there is no prediction theater, it's just our structured analysis, risk management, and execution. Remember to subscribe for more insights like these. Let's dive in. Here we go, starting with the DAX, and if you would look at that, look at this beautiful, strong, clean candle closing above, weekly candle closing above our resistance line. So, I put the Bollinger Band here for you to again appreciate how long and how tight this consolidation was. As you can see, we've been going sideways since like half of 2025, right? So that's been going on for 6 months plus. And that's on an index, right? That's on an index, sorry. So, I mean, this can happen, but you can appreciate how the volatility contracted. Look how the Bollinger Band are pinching horizontal and for a long time. We've been stuck in two very clear boundaries, and we've been saying for the past few weeks that this type of consolidation going sideways, especially when volatility contracts, if you get a break above or below, usually this contraction unleash a strong move, right? So considering that most of the markets are aligned, in a upward trajectory, bullish trend, my main scenario was that we would consolidate for some time more in early this year in Q1, albeit it's early in Q1 and really as January 2026 starts, but in Q1 we might assist at a break above that line and the go signal for a bull market. And this is what we have. This is super clean, super clear. You can see how this closed. Again, this is a weekly chart, weekly candle, so they have weight behind it. They matter. You can see how this candle is very clean, right? There is, I think, like there's barely any week, right? It's been pushing up all week. We have a strong close, cleared that level, and that tells us that that's it. We cleared that level which we've been stuck under for all this month, and now we may assist to an explosive, or at least a run up, a leg up, and the start of the next phase of the bull market, right? I don't know if that's going to happen. Again, that's not prediction, but I'm reading the chart, and this is how I trade. When I place trades on stocks that I select or cryptos, that's exactly the kind of things I want to see. I want to see strong momentum. I want to see a lateralization, consolidation, reduction in volatility. It's cooking, it's stuck, blocked under a clear resistance level, and we have a break. And these breaks usually create asymmetric opportunities for potential explosive run up, right? So what that means here, I wouldn't take position on the index itself and buy the ETF or whatever, but what that means is now we may assist at the increasing pouring of liquidity into German stocks, index and so on. So we may see more stocks breaking out, unleashing volatility and moving up. So that means that there may be more stocks that are gonna have this upward trajectory, enter this join this bull market, because they all contribute to make up the DAX basically. So that means that all lights are green. It tells us that the operator sentiment, investor sentiment is very positive. There is enthusiasm, willingness to buy. Therefore, that information, that close, that change of bias into a bullish bias will allow me to take more risk on the trade that I find. So that's how I use basically this technical analysis. It allows me to press forward, to be more aggressive when the markets are favorable, and to be very defensive when markets are either like crashing or like bear markets such as this, or more defensive as well when we are going to be in a sideways lateralization. So a very clear signal, beautiful. I was hoping we'd get that. We got that. That's great. So now we're going to monitor over the next few weeks how this develops. Moving on to the CAC40 now, French index, and it's a very similar story. We got a beautiful close above that key level there. As a reminder, for about a year and a half plus, the CAC40 had been until end of 2025 in a very big like range basically, right? It's been stuck in these two boundaries, and we had a beautiful break above that key level there in September this year. Small like short run up, pull back, and then we've been consolidating above the key level. And what I wanted to see, similar to the German index, is I wanted to see a close above that level to clear all that, to confirm that we extracted ourselves from that large base, and we had a pullback, a small consolidation after that, and now break above, right? So similar to the German index, I will be more aggressive on opportunities I find on the Euronext or like French companies, maybe Italian, Spanish as well. Yeah, so that's what that tells us, right? That close, beautiful close, very clear, very neat, right? That's what we want. So as well, I have a bullish sentiment as well on the CAC40 and the European stocks in general. Moving on now to the SP 500. And well, if you look at that, our SP 500 as well is feeling bullish, and we had a neat close above basically the previous key high, right? So if you remember, we were in this sideways consolidation for quite some time, and what I wanted to see is basically I was hoping that we'd get maybe a move a bit longer, a longer pause. You see, like you can see how this momentum has been slowing down. So it would have been great to see a little bit more a pause there, lateralization before a break. However, we still had a beautiful there step consolidation. That's healthy, that's great. Now we have a close above, which means that I as well on American stocks will be more aggressive should I find any opportunity that matches my criteria. So very positive. Everything is aligned to bullish. Again, I am not looking at fundamentals. I am just looking at charts because for me, charts tell me what are the operators, the people like me who are buying and selling, what they are doing. This tells me what's going on, what's happening, and it allows me to fine tune my risk per trade, to be aggressive or defensive, and I keep it very simple, and it's been working very well for me. So I'm sharing that with you, and this is my sentiment as well on the SP 500. Moving on to NASDAQ, and NASDAQ is still in this sideways consolidation. So it's following closely the SP 500 regardless. We are not there quite there back on the previous high. So yeah, we may need a few more weeks, maybe a few more months of consolidation and eventually a break above. So still definitely in a healthy uptrend. This is normal. This is great. Everything that goes into a straight line too fast, too soon is not sustainable. So if we want to still enjoy that beautiful bull market that is going on, these kind of poses are healthy and necessary. So that's what we have here, and there's not so much to say. Moving on to gold, and well, gold is still in this sideways consolidation. We had quite a drop, if I should say, like a previous week, but it looks like this is holding on, and looks like the buyers are still there, of course. So we're still in this beautiful strong uptrend. We have a pause there, so again, gold and silver have just been a strong momentum, right? the previous step consolidation there was fairly short, about a month and a half to 2 months. It would be healthy to see something a little bit longer that could look like that in order to stabilize and then have another run up, right? Again, if this would get more vertical, if the price accelerates, such as this here, for example, you'd be wise to have a way to manage that as well, right? Climax run, super climax run, you're gonna need to stick to the price and trade your stop in a different manner than if you are just going with the trend, going with the swing, and yeah, trend following, swing trading. Basically, you need to have a strategy for that in order not to either exit too early or too late, because you don't want to give back too much profits. So this is great. Gold is currently consolidating, and we're going to see over the next few weeks and months what's happening. Moving on to silver, and it looks like silver does not want to stop, right? We did have a pause, right? We had like massive week. Let me check if I'm in logarithmic. Yes, I am. I'm sorry, I was in a logarithmic scale all along. So yeah, there's just massive trend vertical for silver. We had a pause. We're a bit worried, like, okay, is this gonna turn back, snap? And I mean, having a longer consolidation would have been great in order to really breathe after this, like, couple strong runs, especially this one, right? No break, like, I don't know, I think 15-20% plus, like weeks, like just massive. So and look at that, we have a close above the level. So basically silver is not ready to take any break yet. It's just going really strong, even more vertical than for gold. So yeah, as I said, you'd be wise to have a plan to manage that should you be exposed to silver. But the trend is intact. It still looks beautiful, amazing. If you're in the trade, if you have some exposed to gold and silver, then great, good for you. And hopefully we're gonna get more out of it. Moving on to Bitcoin now with cryptocurrencies, and nothing much to add here. We are still forming this little step there, consolidation, to hopefully see a reversal, another run up. And I mean, after the amount of volatility we had in 2025, a longer consolidation, which take us to half of this year, Q2 this year, this summer maybe, and a break above would be great to see, to but maybe eventually expose ourselves again to crypto and Bitcoin and take a speculative trade. But right now, nothing much to add. As you can see, we are still struggling to break above that level there. You can see the week is telling us that there is still some selling pressure, so we're kind of like stuck in there at the moment. Moving on to Ethereum now, and it's the same story. There's nothing much to add. We are also stuck in between these two boundaries, consolidating, going sideways. There's not too much volatility. It looks like there's a bit of uncertainty. So again, I think it would be healthy to see a few months of consolidation and slowly but surely head back at this previous all-time high, their resistance area, and have a break toward like Q2 next year, right? It would be again, I don't know if that's going to happen, right? But what I'm saying is, if something just break out of range of consolidation too fast, it's not going to sustain for very long, right? So that is why after a lot of volatility, it's better, more sustainable to pause for longer, right? The higher the volatility, the better is it going to be to pause longer in order to kind of regroup per se and carry on the trend, right? Anything that goes too fast, too soon, breaks, does not sustain. So it would be good to see a larger pattern such as this, and time will tell. Analysis of XRP now, and again, nothing much to add. A week of pause, beautiful doji there, nothing much happened. As a reminder, XRP is in forming this triangle right there. It's just stuck under the previous all-time high, And what we'd love to see is a reduction in volatility over the course of this year, and maybe in Q2, Q3 this year, having a break. That would definitely, at least for me, give me the opportunity to take a position and speculative trade with potentially really big upside, right? So where did that come from? Well, it comes from there. What you have here is the distance, the amplitude from that run there until there, where we had profit taking and we've been stuck basically. So I just basically transferred over, carried over this amplitude over there. This is the same distance, and that gives me a potential target of plus 350%, right? Which would be great. Again, I don't know if that's going to happen for sure. That does not mean I'm going to have some take profit there. That just means that there is a potential to have at least some upside around there, right? And where did that come from? Well, again, if we zoom out, XRP have been stuck in this massive triangle since end of 2017 until end of 2024, with the beautiful reduction of volatility towards the end. I mean, look at the difference, right? And a break. So we broke that sideways range, we broke the triangle, we had a massive run up, and now we are consolidating above the large triangle extraction under the previous all-time high. And as long as this holds, basically, my scenario, my expectation remains as such. So again, time will tell. And finishing up with the dollar index, and well, our scenario is still at play. There is not much to add here. We had a bit of upside this week. I believe we may see another retest there of that level that we failed to break through, as you can see a few times, 1, 2, 3, 4, 5 times. So we may see another retest. And eventually a break above may signal like a leg up basically on the dollar index. Again, the rationale is, if we look at the past, we had beautiful bottom there, we had reduction in volatility toward the end, and we had a clean break there on that candle that particular week, and then we had a big run up. So again, I use a swing technique where you basically take the distance between like the bottom and the top of the trend, and you report it further, and that gives you a potential target of appreciation for the dollar in our case, which is around 20%. Again, not prediction, it's just analysis, structure analysis, which give me a bias in my head, right? And whether this happens as I imagine it or not, I react accordingly, right? This is reaction and not prediction. And finally, moving on to the trade review. So for those who've been watching last week, this is a trade that I placed live. Literally, last Sunday I did that weekly video, and the day before Saturday I placed that trade. Right there in green was my entry, and I took you through basically where this opportunity came from, why I consider that to be a really quality opportunity with the 1, 2, 3, 4, 5, 6, which is the volume element of why this is a potential explosive setup for me, and this is what I trade. If you want to look at what are the characteristics I look for explosive trades, I have a separate video on that. If you want to look at how I do my routine to find these trades and manage them, I also have a video on that. And today I'm just going to do a quick review of what happened. And as you can see, we had a very, very strong week. So that contraction in volatility and this close above our obvious clear resistance line with volume turned out into a beautiful run-up, unleashing volatility and allowing me to secure partial profit as a 1-to-1 risk-reward ratio, right? So my stop was there, my stop is there, sorry, my entry is there. And at the 1-to-1 risk-reward ratio, 1R, 1 time the distance between stop and entry, I had a limit sell order to take partial profits, which I did. And that allowed me to basically bring back my stop around, the break-even area, my entry level, which means that I cannot lose money anymore on that trade. I've already won. Basically, that trade is won. I already made money on that trade. And now, following my precise trading plan according to depending on the 4 trend scenarios that can occur, and I also have a dedicated video on that, depending on the 4 trend scenario that can occur, I will manage that trade accordingly. So the remaining position capital I have engaged will be managed depending on what the price does, right? And that's about it. So that's the beauty of trading that way is I have secured partial profits. I cannot lose anymore. So I made money. I have peace of mind because this cannot turn into a loss anymore. And by taking partial profit, I am also freeing capital to expose myself to other trades should they occur, right? And my goal is to stack as many free trades such as this as I can, and then to basically neutralize my risk by taking partial profit and bringing the stop to break even, and then have that bucket, that stack of free trades where I already made money, I can't lose money anymore on this trade, and I'm going to milk, squeeze out, surf as much as I can the what's to come, right? So that again, I don't know what's going to happen, right? And that's exactly what I told you last week as I placed the trade. I'm glad that it turned out that way, and that's why I trade that way, right? Because this can happen. The goal is to have our trade, our risk neutralized as fast as possible, and that's what we had here. So that's the game I play. I want basically price to go and hit my partial profit taking as soon as possible, so I'm risk free now. It's all good, and that's how I trade, right? And I don't know if it's going to keep going up or if it's going to reverse. But statistically, I know that trading these the way I do, I have great odds of hitting my partial profit and on average making, making money, making small wins like that. And in some rare occasions, these trades will explode, and that is why I will generate most of the performance of my portfolio over the year. So that's all I do. I expose myself to explosive opportunities. I follow my plan, and I let the market take care of it, right? I just react. I don't predict. I don't predict analysis or what's going to happen. I only, annotate, I observe, and I react accordingly. So the market does the heavy lifting. I'm just there to enter and be present whenever the right conditions are present, whenever it's ripe, it looks great, high quality, beautiful, and that's when I'm going to press forward, present myself. If the market conditions are bullish, I'm going to be able to be a bit more aggressive, which means I'm going to be able to risk a bit more capital. And in a bull market, explosive trends and upward move are much more frequent, so more risk, basically more opportunities because of a bull market, more risk per trade, and faster, more aggressive trend developing equates, most of where your profit is going to be made. So that is why I do this weekly analysis. That is why I share that with you, because I do that for myself every weekend, once a week, and that is how I trade. So luckily, this trade turned out to be a winner. This is great, and I have others in my portfolio as well, which are developing well, and some that I'm waiting to see what's going to happen. So that's a game that I play. If you're interested, to learn more about that, again, subscribe, head over my website, drop your mail, and feel free to reach out as well if you have any question. See you soon.